Welcome back, everybody, for another deep dive. Today, we are looking at AI stocks, specifically ones that might be about to split. We have this really interesting article from the Motley Fool, and it hints at why a stock split could signal some pretty big things to come for certain companies.
Yeah, that's right. I think it's interesting because when a company splits their stock, obviously it doesn't change the fundamental value of the company, but I do think it does kind of signal their confidence in their future growth. And it also makes the shares more accessible to kind of the everyday investor, and that in turn can potentially increase demand.
Yeah, that makes sense. So the Motley Fool here highlights a few companies, like Arista Networks, Broadcom, NVIDIA, and Supermicro Computer. And all of these companies, they split their stock in just the last year. And their returns have been amazing, like just incredible, ranging from, like 318% all the way to 640% in just 2 years.
Exactly. That's such a clear indicator of just like the level of excitement surrounding the AI sector. So today we're going to be focusing on two other major players that were mentioned in the article, Meta Platforms and Salesforce. Now, both of these companies have seen their stock price climb pretty significantly recently, and that has led some analysts to think that stock splits might be on the horizon.
Okay, so let's start with Meta. Now, obviously, everyone knows Meta for Facebook and Instagram, but this article really emphasizes that Meta is a lot more than just social media.
Oh, absolutely. I mean, think about it. Meta owns 4 of the top 7 most popular social media platforms globally, and that makes them a total dominant force in the ad tech world, second only to Google. So, that kind of reach translates to serious financial power. What's interesting is, despite pouring so many resources into AI research in their Reality Labs division, Meta's recent financial performance has actually been really, really impressive.
Yeah, the article mentions their revenue growth was up, their operating margin expanded, and their net income also increased. It seems like they're doing a good job of balancing investing in the future, but also delivering strong results right now.
Right. And what's fascinating to me is how they're leveraging AI, not only to refine their existing platforms, but also to venture into a lot of these uncharted territories. Like, for example, Mark Zuckerberg, during their recent earnings call, he highlighted how AI-powered recommendations have significantly boosted user engagement on Facebook and Instagram.
Yeah, it's funny because, those personalized suggestions are really hard to resist sometimes. You just keep scrolling.
Yeah,
And then they have the Meta AI voice assistant. And Zuckerberg claims it's on track to be, the most used AI assistant by the end of 2024, which is a pretty bold statement.
it is bold.
Yeah.
But you know what? They already have over 500 million monthly active users. So it just might happen. I think it's clear that they've tapped into this, really growing demand for AI-driven solutions that can simplify our lives.
So they're dominant in social media. They're investing heavily in AI, across the board. And they're still managing to post these really solid financials. So what about this potential stock split? What is fueling that speculation?
Well, their stock price, it's more than doubled in the past year.
Yeah.
So some analysts are suggesting that, a split could be a strategic move to make their shares more appealing to retail investors and maybe even boost trading volume. Plus, the company's strong performance. And all of these ambitious AI initiatives really signal to the market that they're confident in their future growth.
Okay. Yeah, that makes a lot of sense. So we've got Meta, this massive player pushing the boundaries of AI while still delivering results. Now let's switch gears and talk about Salesforce. Meta is all about connecting people. So Salesforce is focused on connecting businesses with their customers, right?
Yeah, you got it. They're the leader in the CRM software market, undisputed leader. They hold a larger market share than their next 4 competitors combined.
Wow. That's crazy. So they're basically a giant in the CRM world. And it seems like they're not content with just resting on their laurels. The Motley Fool article also points to their solid financials, strong revenue growth, particularly in their sales and service software. And they've seen this consistent increase in their non-GAAP net income.
Yeah, and what I find really intriguing about Salesforce is how they're going beyond just, simple AI features. And they're weaving this really sophisticated AI into the core of everything they offer. It's not just an afterthought. It's becoming a fundamental part of their platform.
Right. They recently launched Agentforce, which is their AI-powered digital labor platform. And from what I understand, these AI agents are a lot more sophisticated than just your average chatbot. They can actually make decisions and take actions autonomously.
Yeah.
Without constant human oversight.
Precisely. And this is where Salesforce's deep understanding of enterprise workflows really gives them an advantage. Mark Benioff, their CEO, he's emphasized that like no other company, offers this kind of complete and integrated AI solution for businesses.
Okay, so we've got these two powerhouse companies. Meta and Salesforce, both with proven track records, strong financials, and aggressive plans for AI-powered growth. Now let's talk about this potential stock split for Salesforce. What's driving that possibility?
Well, similar to Meta, Salesforce's stock price has also grown significantly. I mean, it's almost doubled in the last 2 years. And so is Split.
Yeah.
It could bring the price down to a more accessible level for some investors. And that could attract, wider range of investors, especially those who might have been hesitant to buy in at the higher price.
So a stock split could be a way for Salesforce to attract new investors and potentially, generate more trading activity. And it also sends a signal that they're really confident in their future growth, especially in the AI arena.
Exactly. It's almost like they're saying, we believe in the value that we're creating with AI. And we want to make it easier for everybody to be a part of it.
So it's really interesting to see both of these companies, Meta and Salesforce, betting big on AI. But at the same time, they're delivering really strong financial results. It really does highlight the potential of AI to drive growth and create value.
Yeah, for sure. But it's also important to remember that the stock market, is inherently unpredictable, and past performance, even when it's as good as these two companies, is never a guarantee of future returns.
Right. There's always risks to consider, especially in a field like AI. It's so dynamic and rapidly evolving.
Right, exactly. I mean, take, for example, just the competitive landscape. The AI field is incredibly crowded. You've got all these startups, you've got these established tech giants, and they're all competing for that top spot.
Yeah.
So it's this constant race to stay ahead of the curve. And, today's leaders might not be tomorrow's winners.
So how do investors even navigate this complex landscape? How do they pick the companies that are really poised for that long-term success in AI?
That's a great question. I think it's really crucial to look beyond just the hype and really delve into the specifics of the company's AI strategy. What problems are they actually solving with AI? What are their core strengths? What are their differentiators? How are they integrating AI into their existing products and services? These are the questions that I think can help you separate, the contenders from the pretenders.
Yeah, so it's not just about this company uses AI. It's about having a clear vision for how AI is going to create value, not just for the company, but for their customers too.
Precisely. And then it's also important to look at the execution of that vision. Are they attracting top AI talent? Are they investing in research and development? Are they forming strategic partnerships? These are all really good indicators of a company that's serious about AI and is committed to staying ahead of the game.
So it's a combo of vision, execution, and a keen eye for the competitive landscape. That makes sense. So let's get back to Meta and Salesforce. How do their AI strategies measure up against those criteria?
Well, I think both companies, they're clear leaders in their own spaces. And they've both demonstrated a strong commitment to AI Meta. With their huge user base and their vast data resources, they're very well positioned to develop those cutting-edge AI applications. And things like personalized recommendations, content moderation, and targeted advertising. I mean, their recent success with AI-driven user engagement is definitely proof of their capabilities in that area.
And what about their voice assistant, Meta AI? Zuckerberg's claim that it could be the most used by the end of 2024. It seems ambitious, but their existing user base does give them a pretty big head start.
Yeah, for sure. They definitely have a head start. And I think their focus on simplifying those user interactions and providing that, really seamless access to information definitely aligns with the growing demand for voice-activated assistants. But they also have a lot of competition from players like, Google Assistant and Amazon's Alexa. So that battle for dominance in the voice assistant market is far from over.
So while Meta has a lot of strengths in AI, there are also competitive challenges to think about. Now, what about Salesforce? How are they using AI to maintain their spot at the top of the CRM market?
So Salesforce is taking a very strategic approach, I think, by really integrating AI into that core platform. They're not just, throwing in some AI features. They're building an AI-powered foundation that's going to, enhance that entire suite of products and services. And I think that's evident in their recent launch of Agentforce, which is their AI-powered digital labor platform.
Right. We talked about Agentforce a bit earlier. It's interesting that they're going beyond just simple AI assistants and creating those AI agents that can work with a lot of autonomy, which is a pretty bold move if you think about the potential concerns around AI making decisions without humans watching over them.
It is a bold move. But I think it also shows their confidence in the technology and how well they understand enterprise workflows. They believe that these AI agents, when they're, designed and implemented properly, could really improve productivity. They can streamline operations, and they can even make those customer experiences better. But of course, it remains to be seen how quickly businesses are going to, embrace this level of AI autonomy.
It's a really fascinating development for sure. And it brings up an important question. How is the regulatory landscape going to adapt to all of these advancements in AI? We've seen, a lot more calls for AI regulation, especially when it comes to data privacy and algorithmic bias. So how might all of that impact companies like Meta and Salesforce?
That's a great question. And I think it's one that investors should really be paying attention to because the regulatory landscape for AI is still very much evolving. And, any new regulations could have a big impact on these companies that rely so much on AI. Like, for example, stricter data privacy rules could limit the amount of data that companies like Meta can collect and use to train their AI models. And that, in turn, could impact the performance of their AI services.
But then on the other hand, having those clear and well-defined regulations could actually help these companies because it would give them, a framework for responsible AI development and deployment. And that could help build trust, not only with customers, but with investors as well.
Yeah, exactly. I think the regulatory landscape is kind of a double-edged sword. There are challenges, but there are also opportunities. And to successfully navigate it, AI companies need to be proactive. They need to be committed to those ethical AI practices. And they need to be willing to adapt as those regulations evolve.
So it's a really complex situation. You've got this technological innovation, you've got competitive pressures, and you've got regulatory uncertainty. No wonder investing in AI can feel like,
navigating uncharted territory.
It definitely can be. But it's also incredibly exciting. I mean, the potential of AI is huge to transform industries and to change the world. And I think for investors who are willing to do their homework, stay informed, and kind of embrace those uncertainties, the rewards could be substantial.
So we've talked a lot about the potential of AI and all the moves that companies like Meta and Salesforce are making. But let's go back to the reason we're doing this deep dive, those stock splits. What can we learn from the companies that have already done it?
Well, it's interesting you mentioned that because this Motley Fool article, it points out several companies that have split their stock in the last year in the AI space. Arista Networks, Broadcom, NVIDIA, and Supermicrocomputer.
Yeah, and their returns have been pretty impressive, right?
Yeah.
But does a stock split really tell us anything about a company's future? Like, is it a sure sign that they're going to be successful? Well, a stock split by itself doesn't guarantee anything. It's not some, magic formula or anything. But I do think it can be a good sign because it often means that the company is confident about where they're headed and they want to make it easier for more people to invest.
So it's more about the message it sends to the market, like they're optimistic about what's to come.
Exactly. And if you look at those companies we mentioned, the ones that already split their stock, especially in AI, they tend to be companies that are doing really well. They've got innovative products and services and a pretty clear plan for how they're going to use AI.
So it's not just about finding companies that have done a stock split. It's about looking at the whole picture. How are they using AI? How strong is their performance? Are they confident about their future?
That's a great point. Look for companies that are, solid and in a good position to really benefit from this AI revolution. A stock split could be a good sign, but it's definitely not the only thing to consider.
It sounds like investing in AI is pretty complex. You got to understand the tech, analyze the companies, and even try to read between the lines and figure out what the market's saying.
Yeah, it's true. It's a constantly changing landscape.
Yeah.
Got to stay informed, be ready to adapt, and really think critically. Because even with the most promising technologies, there are always risks. You can't just assume that what worked before will work again.
So as we finish up this deep dive, what are some of the key takeaways for our listeners when it comes to looking at AI stocks and this whole thing with stock splits?
I think the most important thing to remember is to be balanced. AI has this incredible potential, but there are also a lot of challenges and things we still don't know.
Don't get caught up in all the hype.
Right. Do your research. Don't just believe the headlines. Really dig into what the company's doing with AI. Who are they competing with? How are their finances? Are they developing AI responsibly?
And maybe a stock split could be a good indicator, like a little sign that things are going well.
Yeah, it could be a sign that they're confident about growing, but it's not a guarantee.
Well, I think we've covered a lot today, from how AI is growing so fast to the ins and outs of stock splits. It's been a really interesting deep dive, and I hope everyone listening feels a bit more prepared to navigate the world of AI investing.
Me too. It's all about learning as you go And if you stay curious and keep up with what's happening, you'll be in a much better position to make smart decisions.
Thanks for joining us. And until next time, keep exploring and keep learning.